What in the world is going on with mortgage rates? We've been talking for the last few months about as inflation trends lower, the mortgage rates would improve as well. And we have certainly had multiple CPI, PCE, other inflation measures that have confirmed inflation is trending lower month over month and year over year. So why is it that the mortgage rates have been spiking the way they have over these last few weeks, basically hitting levels back in October, November of last year? And it comes down to other economic measures. Wage and job growth still incredibly strong. Retail sales showing high levels of consumer spending and demand. Business and manufacturing data showing continued expansion, a sign of a very resilient, very strong economy. Not all what the Fed wants to see, right? They have been hiking their short-term benchmark rate, the federal funds rate. They've been implementing restrictive measures in an effort to slow the economy, to push down prices and ease inflation. The concern is that inflation is going to pop back up. We saw this in the Fed minutes that were released on Wednesday. This is kind of a summary of the last Fed meeting. Fed participants are very worried about inflation popping back up. There is serious discussion about holding the federal funds rate for much higher and longer than what the markets have been projecting. If you look at the Fed futures forecast, which is a projection of the federal funds rate, it's been forecasting 3 to 5 rate cuts in 2024, which is crazy. So the markets are being forced to now readjust those forecasts, which directly impact mortgage rates, as now investors may not necessarily have the same appetite based on changing projections of economic conditions down the road. So how do we properly advise our clients in this type of environment? And it really comes down to paying more for an asset, even with lower interest rate, does not give you a lower monthly payment. Home prices are continuing to rise. Home appreciation is probably going to settle on that 5 to 8% year over year. You want to get in that property now, enjoy all those benefits of home ownership, and then refinance down the road once rates fall. There's not an analyst on the planet that thinks the rates are going to hold this level. They are going to come down. It may not be in 24 as some had previously forecasted. It might be early to mid 25, but rates are going to come down. Get in that property now, enjoy those benefits of home ownership, property appreciation, tax breaks, and then refi down the road. You have any questions about these headlines, about these changing rate trends, or if you want to talk about how they impact you and your purchase power, definitely give me a call. This is Billy.Saylor, your mortgage professor, 571-330-5884. Have a great week.